The 4th of March, and just here for a quick live update. I'm not going to go into depth today. We normally pop into these. We talk about key levels on E-minis, key levels on crude, key levels on gold. We talk about Forex, we talk about crypto, we talk about some of the automated strategies. I'm running really short on time today, and I'm going to keep it short, so I'm sorry for that. But at the end of the day, what we've been talking about for days and days and days and months leading up to this it's still the same. I'm looking at key levels. So, E-minis, we're watching key levels that are made on a 4-hour time period and seeing how price interacts with those on a 30-minute. The 4-hour trend is down, the 30-minute trend is up on E-minis. On crude, 4-hour trend is down, 30-minute trend is up. On gold, 4-hour trend is up, 30-minute trend is up. For those that have the conflicted up and down, like the E-minis, the crude, they're volatile right now. And so all the markets are really, really volatile right now. So what do we do with it? Well, that comes back to having a plan. Having a solid plan is going to keep you out of trouble. When you don't have a plan or you don't stick to your plan or execute your plan, that's when you get into trouble. I can say that. I think we all know it. I've experienced it. I'm sure everyone has experienced that. You do more harm to yourself when you don't have a plan. So have a plan, stick to your plan. Markets are volatile. You get into situations where you might experience a string of losses because the volatility of the market doesn't work with the plan you have. Market conditions change. Don't keep changing your plan to try to fit the current condition, because you don't know what the next condition is going to be. What typically happens is somebody's got a plan and it's working. It's got a good mathematical process behind it. It's producing maybe even a high rate of wins, and then the market stagnates, or the market shifts and it changes directions, or something happens. And after a couple of losses, folks typically want to change their plan to fit that current market. Well, then that current market isn't really the current market, it's the historical market, right? So then that market changes again and it starts trending or starts moving again. And then they flip back to a different plan to try to catch up with that market. You're better off finding a plan, sticking to the plan, executing the plan. So anyway, soapbox time. Sorry for that. We've been talking this week focused on breakouts. So, finding a plan. What plan should we find? I don't know. It's totally up to you. But a breakout is a great plan. So is a bounce. So are some other things that we're going to talk about later into the month. But this week, we're focused just on breakouts. And the purpose of that is to give you some ideas of how you might create a plan. I'm not going to tell you specifically do these things and you will see success, because not everyone's going to do those things. I'm going to give you the ideas and the processes around creating a breakout strategy, and then things that you need to consider when running that strategy, because what works for one person may not work for another person. And what do I mean by that? You go, well, how can one thing work and another thing not work? Because psychologically, one person, if it works for them, they're going to apply it the right way. And something that doesn't quite fit their personality, they're not going to apply. So, a breakout strategy with a fixed fixed loss point and a fixed take profit may work for one person because they like that strategy. They're able to understand that I can have loss, but when I have a win, it's going to outweigh those last 2 or those last 3 losses. They can live with that and they can work with it. Whereas the other person might just flip out. I can't take it. So another person might have a strategy that has a risk percentage or a risk point, stop loss point, that moves maybe as a trailing stop to the previous candle, because they want to be able to maximize potential big wins as an instrument takes off. That plan is going to work better for them than maybe a fixed. Another person might want to have a 1-to-1 risk-reward ratio, but utilize a trailing stop that trails, for each tick or each pip that it moves in their favor, and they ratchet off risk very rapidly, but take that fixed reward. So there's a lot of ways to come at it, is what I'm saying. There isn't a one-size-fits-all. A breakout strategy is an amazing strategy. It's a really, really good strategy for things I've talked about yesterday, for reasons I've talked about in previous lessons as well, because of the psychological aspect of trading with that momentum that breaks through that top. It doesn't win every trade. And you've got to be prepared for that. And you've got to have a strategy that you can implement over and over and over that fits your personality. So there isn't a one size fits all. There's no, quote, right way to do it. Well, there's a better way. I mean, there is a right way. The right way is to cap your losses, and not just let those things go on into eternity and blow out accounts. That's the right way is to cap your losses and give yourself a mathematical positive expectancy. Beyond that, how you manage your trades intraday, there is no, quote, right way. That comes down to each person's personality. You've just got to have a fixed process to do it that's consistent. And you've got to be consistent about that process. It's like we know if we go for walks every day, we'll either lose weight or we'll keep ourselves in a certain shape, right? You can't walk one day and then not walk for 25 other days and expect that that one walk is going to do the right things for you. It's the same thing with trading. You've got to be consistent with what you're doing and how you're applying it. So anyway, sorry for the long soapbox. Let's just pop over, because like I said, I am limited on time. Let's just pop over here real quickly. We'll talk about breakout strategy again, how we're looking at it, how we might utilize it. We'll have a look at, I don't know, gold. Was gold in a gold oil? Yeah, we'll find something here we can throw on and have a look at this breakout strategy. Again, talk about how to utilize it with one of the tools that I've got in the members area for free right now. And then I'll let you guys get on with your way, because I've got to get moving myself. So let's go to this screen. Yeah, that's the right one. All right, so we're gonna pop over to this screen. This is MT4. And we've got a S&P on here. We're still about half an hour prior to regular trading hours, so great time to set up potential trades. And what I've got on my screen is my advanced breakout EA. And what it allows me to do is it allows me to set up potential points for entry. And then I can just leave it and move on with my time. We've got a couple of ways that we can trade using this, and one is to look at tops and bottoms over a period of time, right? So we can look here and we can see, so this is a 15-minute chart, and this is on the S&P 500. So we can look at this 5-minute chart and we can say, well, we've kind of got this this bottom. If we look right across here, right, I'm dragging this line. This is a ray. I can drag it back across. We can look across here and we can say, wow, I've got some, pretty good areas where this has seen, it's been support, it broke it became resistance, it broke it became support. This is a pretty good area of support. I might want to use this as my bottom edge. If it breaks below this, I'd like to sell it. So I'm going to put my I'm going to move this back over here so it's not quite so far out. So I could use this as my bottom edge and say, hey, if it breaks down below this bottom edge here, this is where I'd like to sell it. And if I hover over it, I can see it's my sell point, right? And I hover over this orange one, and that's my sell stop loss, sell SL. So I'm going to put that a little bit above it. Now, how far above it do I want to go? Two trains of thought on this is, some people say, well, if you're going to play a breakout, play it to your top edge. Others are like, well, if it's breaking through there, I can trail it based on the average movement for that specific instrument. In this case, we can see what the average movement is coming into the U.S. session, so what our average trade range is on this specific time frame, and then we could set up a stop loss that's based on that. And then we can move our take profit down here, and we'd like it to be at least 2 to 1. So if this is 11 points right here, we'd like our stop loss or our take profit rather to be at least 11 points down, if not greater. So we could look at setting our take profit point down here. The other way to do it is to look at another key area of where you've got that next level of support, and then place your your take profit point at that next level of support. On the top level over here, we've kind of got this top edge. Let me just move my stop loss down here. We've got this top edge right now where our intraday high is up here at 3074, 3075, right? So we can say, well, if we break above that top edge, I'd like to be able to buy it. So I can set my buy order up here and then do the exact same thing, considering where the intraday movement has been up to this point, and then I can set my take profit, at a level higher than that. So we can set that up, and then if we're ready to do it, we just simply click buy or click sell. Another way to look at breakouts is to look at the channels. So let me just move these out of the way. We've talked just about very kind of bland these horizontal breakouts, but you can also look at it based on a trend line as well. We could say, hey, we've got this trend line that's moving like this, and we could say, hey, we're kind of caught in this channel. Maybe if it breaks above the top, I want to buy it, and I'll do this. But maybe on the sell side, if we're trending along, and I'm going to move my stop loss over here. If we're trending along, and we kind of watch through here, and let's say, well, we've got this ray going this way, and we've got this channel forming like this on these bottoms. If it breaks below that, that's when I really want to sell it. So we could set this up to be based on a ray pattern, or based on a trend line as well, so that we could say, hey, if we break out of this, so we've been trending up, but if this trend changes and we break below this, that's the point I want to sell from. We could set it up that way too, and then have it take profit either at a fixed level like this, or we could set that take profit point with that current trend. But maybe we want to say, hey, if it breaks below this and it gets back down to this next key level, wherever that might be, I didn't scroll out to a larger chart, but maybe our next key level is down at 2980. We could set our take profit point down at 2980. So we can say, hey, if this continues trending up, I don't want to do anything, but if it breaks that trend, now I want to short it, and then I'll take it short down to 2980. And after we get that set up and we get the lines where we'd like them to be, and you don't have to do it with lines, by the way. I mean, you don't have to use this tool. So I'm trying to say you can set your entry points and your stop loss or take profit points by building your trade using your regular broker software. We can build that straight out that way as well. But I find it easier to do with an EA like this, because this allows me the ability to get kind of creative, and it allows me to take a percentage risk and build out that trade level based on my account, versus having to do the calculations of how much that trade is worth and how many lots I can risk and so on and so forth. So anyway, a couple ways to come at it, but the basics are, with any kind of a breakout, you're just simply looking for an instrument that's fallen into a channel, whether that's a channel like we've talked about here with a trend, or it's a channel where, like we saw yesterday, where it was just hovering right in the middle between these key areas, and it broke out of it. Yesterday had a good momentum break on that U.S. news, as we had some changes to interest rates, and then it fell off the cliff after that. So commentary aside for where we think our market's heading, but that's a breakout, just another way to look at your breakout strategy. The key things to keep in mind, the key things to remember are, one, just because it breaks a level, it doesn't mean it's going to win, right? You're going to have losers in any strategy that you put on. So manage your stop loss. Put a stop loss in place, but make that stop loss based on something that's real. You can't just come into a trade and say, I'm always going to, well, I mean, you can. I'm always going to use a 2-point stop loss. Okay, great. But what's that really based on? 2 points in oil is nothing. 2 points in S&P, it's small, but depending on the time frame you're trading, maybe it's okay. Base it on the trade range for the instrument that you're trading. Another good way to look at managing your stop is, at a minimum, do it slightly beyond the previous candle, right? So if you're looking at a breakout and you're intraday managing it, you could set your stop, your entry point at the bottom of that, of whatever that level is, but have your stop loss be above the close of the previous candle. But if you're not managing it in intraday, and you just want to be able to set something like this, set it and then walk away, at least have your stop loss based on the average trade range for that instrument, so that you're not instantly just stopped out due to regular volatility, right? So those are the considerations, and again, kind of how we could utilize it. So right now, intraday, this instrument is an upward trend. So what I'm going to do, not even since I've moved these lines over here, I'm not even going to worry about it. I'm just going to simply put this buy order on. I'm going to say, if we break above the top that was previously set in off hours, if we break above that top, I'm going to buy it, and then I'll take profit, if it moves up to 3,100. And if it moves down from here, the trade won't fill, and that's okay. Nothing has happened. If it does move up, then I've got the potential to be in a trade. So that's how you break out trade, guys. We'll come back in. We'll do it again tomorrow, and keep going from there. Tomorrow will probably be the last live update I do, though, for a little while. I'm going to leave to go to Costa Rica a day early. We're going to go on Saturday, but I think I'm going to leave on Friday instead. So we won't be doing a live update Friday. Tomorrow will be the last one. I should have more time tomorrow, so we'll get out and we'll do all of the full in-depth look that we typically do. But for now, I've got to get running. I just heard the garage open. My wife's home, so I got to get moving. All right, so that's it. We'll talk to you later.